Welcome back, guys. Good to see you guys here. If you can hear me, please give me a thumbs up. I wanted to kind of start a little bit early today. Well, sorry, a little later today, just to kind of get some people who haven't been able to actually attend this stream before. And I want to welcome all of the new people who are here. If you have not been on our live stream before, welcome in. We usually do this 1 hour prior to market open, but today I decided to kind of switch it up a little bit and see if we can do one during market hours. Honestly, I would love some feedback just to hear from you guys, if you would prefer it at this time or you would prefer it before the market opens. Personally, to me, I don't have any preference, and I think that regardless of the time that I do this, I think you would still receive the same amount of wisdom. The only advantage of having this pre-market is the fact that you would get, some information that perhaps would be more beneficial to you to listen to before the market opens, and then kind of work your way through the day. But yeah, you know what? Leave a comment in the live stream, please, like below, and let me know if you prefer this to be during market hours or before market hours, and then I'm gonna, kind of work out what time is the best. So going into today, I wanted to just kind of run through the news with you guys, which is what drives the market right now. As I've said numerous times before, we are in a narrative-driven market where the news controls majority of the price action. We have seen SPY make a huge dip, about 30-some% down, and then what I thought was a dead cat bounce, only hoping to go lower. We did almost get that break on Friday. In fact, we had almost like a triple bottom here at these key levels. Oh, let me get my Sharpie real quick, because I need to draw shit, because this shit needs to be drawn, bruh. Okay, so let's see. All right, get this, and I want to choose white. Okay, so we got the wave down, and then we thought this was a bounce, came back up, right? And you know what? I was convinced that we're going to drop further down here. Now, I'm not saying that we're not. All I'm saying is what I thought was going to happen, I think is happening, which is we're kind of going range bound, which is worse than dropping. So what's actually happening right now is we're consolidating in this channel, and we could technically see, let me show you a chart that would make it much more easier to see. So if you see, SPY has been kind of going ding dong between these two levels, the 23.6 fib and the 38.2 fib. These are generally very strong pullback levels for a fib retracement. 50 is the next one up there. But we haven't been able to break this specific price, at around 26.45. So if SPY really wants to make a run up, it needs to break 26.45, which it has not been able to do. However, since yesterday, not yesterday, but last week, we saw SPY go into like a sideways channel, what looked to me like it was initially in a downtrend formation where the candlesticks were trading below the moving averages. And then slightly after, we got a break today at market open, and we gapped up. And usually gap ups are usually followed by an uptrend. So this may be once again another squeeze. And you know what? I've told you guys, be prepared for these squeezes. They're going to be brutal, and they're going to be plenty. There's going to be a lot of squeezes happening this month, actually. And the reason is simple, right? If you go into StockBot, where we have our wonderful StockBot channel, and you use the commands on StockBot, right? You can go !OI and then type SPY, and you'll get the open interest on SPY, right? Which is all the open contracts that people are trading on SPY. And you can see, look at the entire month of April. Okay, just look at it. Can you see one instance where we have calls more than puts? No, you can't. They're all puts. So all the traders are leaning bearish, which means to say everybody is bearish on the market. Options traders are bearish on the market. And if you're holding SPY puts, then guess who else has access to this information? institutions have access to this information, and when they see that there's a lot of people holding puts, they can squeeze the price up so that they force you out of the position. Now, obviously, at some point of time, what happens is that, as I was explaining in the previous live stream, people get squeezed all the time. It's like you enter, if you entered a put position somewhere here, then, well, yeah, you're pretty much messed up, aren't you? Because you entered it on the bottom, and then now it's going up and you're squeezed all the way to the top. And the problem with that is the moment you reach somewhere here, you're already screaming for pain and you're heading to the exits. And what that causes, the opposite of a short, is a buy. And so it causes a wave up further, which is even worse. So the issue here is caused by a lot of short interest on SPY. And the short interest on SPY is causing traders to be bearish, and institutions can take advantage of that. Don't forget that market makers have far more capital and far more muscle than we do. And in that case, you can easily understand that they would make a really nice penny out of you by squeezing you out of these positions and then taking the counter position right when there's no more sellers in the market up top. So imagine this being squeezed and squeezed and squeezed and squeezed, and then people just keep leaving the market, right? All the sellers keep covering. And when the sellers keep covering, there will be no more sellers left, right? And then that's when they execute their sell order here, and then they ride the wave down. So you got to be careful of these, and sometimes you got to have diamond hands. You need to be able to tell what's going on. I still feel like we're being squeezed up. The news is not getting better, guys. I mean, Japan moves to declare a state of emergency. Does that sound positive to you? No, it doesn't. Indonesia's cases are seen to be expanding. We have a whole bunch of stimulus coming out from, various countries. Singapore has 5.1 billion. The U.S. hasn't shown any sign of, I guess there was some sign of improvement, but it barely, man. Like, I don't think we have reached the pinnacle yet. Like, I think that we still are going to see a lot more deaths and a lot more bloodshed. So, it's going to be really interesting to see what happens, but I'm definitely still holding my bearish stance on the market because I don't believe in these rallies. Like, you got to understand, look at the 4-hourly chart. Every time we have a strong rally, it's followed, by some kind of a extended relief downtrend. And so far, we've tried to test this bottom numerous times. And I've tried to test the top twice only. So we're heading more towards the bottom than we are the top. And I think that these waves up are meant to scare investors out of their positions, which is fine, right? The closer you get towards your contract expiry, which is, for me, I'm holding 417s and I'm holding 15s. So, it's just that your contracts are going to sway more crazily, right? So you got to be patient. Observe the macroeconomic conditions. One other thing that I wanted to talk about was the ongoing saga of how corporate bonds have not improved. And, you got to understand that whole situation, right? Because corporate bonds is what America relies on in order to fund its debt. And now with the corporate bond system collapsing, it's really all smoke and mirrors, right? The Fed is pumping liquidity, but is money really enough to solve this problem? That's a question you have to ask yourself. Now, there is a contrarian approach to this where I had mentioned that markets follow a rule which is called the efficient hypothesis theory, which is efficient markets hypothesis, which is a theory coined by Eugene Fama and Robert Shiller, which are two really great individuals who contributed a lot to our economics and behavioral finance. So essentially the idea is any information that is available in the market is instantly reflected in the stock price, right? We all know this. When news breaks, the market, it reacts to the news instantaneously. It doesn't wait. And hence you have these swings in price. Now, if you say that the efficient markets hypothesis theory is true at all times, then you have to also take into account that when this drop happened, we priced in every single thing that happened till now. Now, I think that's a really super bullish way to look at it. To say that this entire drop is taking into account every single thing that has happened and will happen. And I don't necessarily believe that, but there are people that tend to think that way. But you can see that we did bounce up to the 38.2, which is a strong retracement for fib. And the important thing to note is, even though the market moved up in response, you have to realize that this was a pricing in for things to come within the next few months. So I would say the market was pricing in a recession. That's for sure. Yeah, the recession was fully priced in, right? But how long was that of a recession was that priced in? How far out was this recession priced in for? That is the question you have to ask yourself. And if you believe that this drop plus this recovery equals to the distance forward, then you can come up with a rational statement to understand that I don't believe that this is going to be another V-shaped recovery up like that. I think that the way that this is going, with no improvement in the situation, we don't have a vaccine developed, we don't have news of a vaccine, it's very difficult for us to be bullish on a market as such. And we have companies that are basically collapsing. And I've said this many times before. This is like the financial version of Darwinism, where only the elite will survive. And you have to understand, like, this destruction that's occurring now is the natural law of the system, where the weak get, basically diminished, and only the strong companies producing organic cash flows with good earnings will survive. So we can remain partially optimistic if we break above this level, which is the 2645-ish, which is what we need to break. Essentially, what you really want to see is a clean break above the 38.2 fib level with good volume. And then we can, essentially wash our puts and say, all right, we're out of here. And even then it could be a fake out. So you have to be extremely careful. Cool. I wanted to also show you how this looks like on this chart. So the other thing about it is, on the monthly, you have to realize, as I said in the past, right? Bear markets dropped a total of about an average of 50%. Now, these two bear markets that happened in the dot-com bubble and the 2008 financial crisis, they were for a very long period of time. In fact, this one was for almost 2 years, and this was for a year and a half. So, this drop is unprecedented, and it's a very quick drop. So, we could see a recovery quickly, but we have to take into account that what SPY is trying to do over here is recover up above this level. Now, the other thing that I wanted to talk about was volume, because volume is important in judgments of these markets. Okay. Now, as you can see, as we dropped, right, we had huge volume, right, all the way till the bottom. In fact, even on the day after the day that we were on the lowest, the volume was peaked, right? Which means we had a lot of up and down motion, or a lot of down motion, or a lot of up motion. It doesn't specify what kind of volume it was, whether it was a buy or a sell, you can't really tell. But what I want to point out is, right after that, we had a lot of decreasing volume. You can see that, right? In fact, today is on track to be one of the lowest volume days, right? Now, I had said this in my previous stream, and I said that usually when volumes fall like that, that's usually a signal that we're about to see some kind of a trend change. Now, the trend actually changed upward, but you must realize that the lack of volume means that there's lack of sellers, right? That means if something is going up so much on low volume, that means there's only buyers in this market, right? That's the only thing you can come to a conclusion to, that nobody sold into this rally, or the selling wasn't enough, and hence buyers just took everything up. So you have to look at the volume, and you have to analyze things in a way that not many people are doing. Now, the other thing is the moving averages, right? And I tend to use the 50, 150, 200 moving average. we still haven't seen any sign of the moving average recovering. Now, the further that this moving average goes down to meet this moving average, this 50 moving average is going to start to act as a line of resistance. And if we draw the fib retracement into here, which I'm going to show you really quickly. If this drags on for long enough and we get a rally up, what you're going to see is that this moving average is going to come down to touch the 38.2 or the 50, the 0.5, the 50% retracement, or the 38.2. Now, these are the two levels at which you could see the moving average start to smooth out, and then, or it could either come down here and then smooth out, or it could come down here and smooth out. So the longer that this goes down, that means we're going to be range bound. I'm not sure if you can follow me here, but I'm going to try and explain it again in a way that maybe I'll use a few drawings. Okay, so there's a couple of ways you can draw this moving average down. Now, this moving average is more, remember, the 50 is more reactive to price. So it could go like this, right? Or it could go like that, depending on the price action, right? So the more exaggerated the line is, that means that the moving averages are going to eventually come up to use this as a resistance point, because moving averages do that sometimes. They tend to be either a support or a resistance. So we have to see how this plays out. But if you see the way that the 50 moving average is curving down still, this signals to me that we're still in a downtrend. And the trend still holds for the 4 hourly, in fact. Sorry. So let me show you this. Oh boy, this is terrible. Okay, so on the 4 hourly, you can actually see it more clearly. I hate that I have these lines, but I hope you can see it. The 4 hourly, you can see eventually this chart is going to become this chart, because this is just one time frame away. So eventually you see how the moving average comes down. It's this candle, as it goes, continues to try and break higher. It's going to use this moving average as a resistance point. So if we see the break above the moving average, then we'll have to kind of reassess our analysis. But that's another way you can use moving averages, right? Because there are multiple ways you can do this, right? And let me just get rid of the OBV here, because that's not pertinent. So yeah, based on our technical analysis, I don't see that we're in a full bull mode. I still see the case for the bear scenario, albeit the fact that we're pushing up on low volume, and the low volume is the lowest it's ever been today. We pushed up on the lowest volume ever. So you have to understand, it could be or it could not be a good thing. So just that kind of concludes the technical analysis. I know that I was looking through. Oh, and another thing, I did read a couple of articles that was saying that there is a run of people who have invested in hedge funds. And you have to realize, if people are running their equity out of hedge funds, that is actually kind of worrying. I'm guessing it's because those hedge funds got, super overcommitted in their positions, and hence, they're facing some liquidity crunches. But, people pulling money out of hedge funds is like, in an environment like this, is like kind of one of the smoking guns that you need to tell that, we're not in a stable state to deal with things. Because the word hedge fund literally means that they make money on both sides. And so that's one thing to also keep in the back of your head. Cool. So let's kind of do a little bit of Q&A. I'm going to give it a minute. You guys go ahead and ask whichever questions you want. This is also going to double as a office hours. And I'm going to type it out on the chat right now so that people can come through and, ask questions and stuff. So I'm going to give you guys like a minute, think of some questions that you want to ask, and then, post it on here, and then I'm going to go through questions like office hour style so that we can bang them out. Cool. All right, everyone. And All right. So let's do that. All right. Let's see. Music. Thank you, Snake. Appreciate it. By the way, thank you guys for being here. I really do appreciate your time and your commitment to learning. Believe me that there is nothing better that you can do than to collectively be a part of a group where you're learning from each other. If you haven't already subscribed, hit that subscribe button. If you're from Option Swing, thanks for showing me the love. If you're not from Option Swing, welcome to the channel for the first time. We are a community of Discord traders that are actively trading options. Our channel is very, very active. We have almost 800 members, and I hope that you guys will check out optionswings.com and our Instagram. It's all in the description below. Also, just want to show you what the channel looks like. We have traders calling out trades all day. Very experienced trades. We put out really great knowledge here for everyone to learn. We have a bot. We have a bot that does flows. We kind of skim through various flows from institutions, all kinds of flows, small flows, medium flows, big flows. And then we have the education portion, which I spearhead and I lead from the mod team. And love all my teammates who are part of this journey with me. All the mods are freaking awesome. They pitch in and do amazing work. And yeah, so welcome to the stream if you've never been here before. And just hope you like it here. Hit that subscribe button, hit the like, show me some love. Definitely let me know in the comments if you prefer the pre-market or the during market timing. Cool. Needed guidance. Portfolio is down. Okay, let's see what we can do here. Thank goodness. What time is it starting? Just 10. Oh, I love Sound Hollow, man. Okay, let's see. US Coast 6 a.m. too early. I personally. Okay, so you think before market opens is better? Gives me a better perspective, more clarity. Yeah, you know what? I can see that. I can definitely see that. I wanted to try something different today and do it during market hours, and I see that actually during market hours we don't really see a big difference in the amount of users that come on. I thought that maybe we might see more users join the stream during the market hours, but it doesn't seem like it. So I might actually just revert back to the pre-market hours so that we have kill two birds with one stone and get you guys the analysis that you need before the market opens. Great. Like this, whether you like profits. Is this a good time to look at roll my 5-1 spy puts into a longer expiry? Definitely not here. Don't roll them over just yet, because remember what I just said, we're moving up on low volume. So don't ever roll your puts out at when you are at the absolute highest. You're losing out the most premium. You want to wait for a retrace down, and those retrace happen. Like can happen so quickly, man. Like look at, to just put into perspective for you, like SPY can rally like this. Sorry, let me show you. SPY can rally like this for like a day and then come crashing down the next day. So this rally is peanuts if you look at it. As I told you, like we're range bound. We're range bound between the 23 and the 38.2 fib levels. So what goes up can come down right away. So don't roll over your puts just yet. How much higher will the squeeze go? Well, that's a good question. I did say that the squeeze seems to be between these two fibs, so we're squeezing between these two. In fact, it's falling a little shy of the 23.6, which is, I'm guessing that this is a little bit of impulse included in there. But as you can see, the candles, they never close below this level. They always end up going back up. So the squeeze could technically go up to here, the 38.2, which I see SPY at like 265, something like that. Let's see. Is it safe to say any bad news regarding virus will hardly move the market? We'll need negative economic news to take second leg down. Actually, it's the complete opposite at this point. As I mentioned in the previous live stream, bad news is often the end of a bear market. You need good news for this to turn over. Some kind of good news has to come out so that the market can, take a reality check and come back down. What do you think about the number of cases in China claims that they are false? Well, I'm not a I don't really know the stats that much, but I would say that definitely, it's arguable, man. Like, I've been to China before, and I know that they're really capable of what they're doing, controlling the situation. But at the same time, I kind of want to also, take the perspective that there was some falsification. So I'm kind of in the middle there. During market pause, PST time is too early. Yeah, see, that's the thing. Well, I guess for people who are waking up late, or it's too early, you're gonna have to watch the replay, because the thing is, I think doing it pre-market has its benefits for the channel, and so that people can get clarity before the market opens, which is kind of the reason why I did this. I'm thinking of getting into some long-term calls for July or August in HD, Amazon, Apple. Yes, it is too early for that. I personally think it's too early for that. See, if we're expecting another leg down, then you should wait for the next leg down to take those calls. And I personally like those three choices, by the way. Apple is a little iffy for me, but I like HD and Amazon. They're both good picks, especially if you're taking if you do like a covered call strategy with Home Depot. That's a really good one, because they pay dividends, so you could stack your passive income as well. Cool. There's no more questions. I can't believe it. No way. How is that possible? You guys gotta have more questions than that. That's far too little questions. So we get much more questions during market hours. No questions? All right. Well, if I don't see a question stream in the next 30 seconds, I guess that will be the end of the live stream. I don't want to drag this on longer than it should be. Um, but yeah, let's see. I'll give it like 30 seconds more. See if anyone wants to ask a question here. Oh, you guys are looking at charts. I see. Okay. All right. What's that to look at though? The market's moving on low volume. I mean, I'm personally not even looking at it. Like, all right then. Thank you guys for streaming in, and I will see you guys on Wednesday pre-market instead. Have a good day, guys. Peace.